Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. First one is Euro-Dollar. A second bearish black crow yesterday continued follow-on lower from the recent bear spike. The market was bracketed between the overhead short moving average, currently at 121.01, and below by the rising medium moving average, currently at 120.33. Further down we have the interesting recent 50% Fibonacci line of November 2020 to January 2021 move at 119.75, and then limited support bar the low of 119.5 zone area until we get turned to even 119 even area. So far today, a dip below the medium moving average, but it's a cautious try so far. I'm thinking of drawing a bearish Andrews or shift pitchfork for the 2018 action. I'm not sure which or whether I will even do it in the first place, but I'm going to watch and look out for that. Cable, aka sterling against the US dollar. Hesitation yesterday. Yes, I suppose you could call it a third bearish black crow, but the action and where it occurred is more akin to an indecisive spinning top pattern, sitting right on the middle time, currently at 139.12 of the important late June, late September 2020 bullish shift pitchfork. Oddly combined, right now at least, with a rising short moving average, currently at 139.15. The bullish shift pitchfork has shown the bullish angle of attack since November last year. Below this middle time we have the support from the recent congestions at 138.15 and in a band 137.5 to 136.5. So far today, a breach below the middle time and the short moving average, but it has been limited up till now. Euro sterling. A stuttering follow-on lower yesterday to the previous session's possible tweezer top. Stuttering because it was an indecisive spinning top, bracketed by the overhead April 2020 low at 86.69 and the next support below at 86.17. We still have below also target X2 for the head and shoulders top at 85.15 area and target X1, the target for the recent sideways triangle. Let's wait and see. So far today, a nothing, looking like an indecisive doji cross right now. US dollar against the Indian rupee. A bearish harami yesterday, quite a large one as well. This after the previous session's large gaping higher bullish long white Mariboso, so I suppose a reactionary counter was not really that much of a surprise. The market opened below the 50% Fibonacci level at 73.84, moved down below the other 50% Fibonacci level of the September 2019 to April 2020 move at 73.68, and finally closed below the medium moving average, currently at 73.48. Interestingly, prices chose not to drop down to the seemingly supportive flatlining short medium moving average. For information purposes, just below that we now have the gap of 72.76 down to 72.93. So far today, a move back up to test the medium moving average, but no real breach of this overhead resistance as yet. In fact, it's looking very much like an indecisive doji cross right now. US dollar against the Brazilian real. Bullish opening white Mariboso yesterday, a new high for 2021, as well as a third bullish white soldier. Perhaps the most interesting thing was that it was a second consecutive close up over the lesser Fibonacci level at 552.91. Now, this Fibonacci level is the overhead flat trend line of a possible bullish ascending triangle pattern formed this year. A possible topside target for such a pattern would be at about target X in the 576.60 area. Now, a word of caution. Having travelled so far along the ascending triangle increases the risk of a forced break, so watch out. However, second consecutive close as we've had over the lesser Fibonacci level does strengthen the case for the ascending triangle. US dollar against the Mexican peso. A bearish black crow yesterday. I suspect this is as a result of the overhead resistance provided on a closing basis by the breached overhead upper bull channel line, currently at 20.9198, and that's for a third consecutive day it's held up there. The market's fall was held up, the support, interestingly by the lesser Fibonacci level at 20.6062, also on a closing basis. So far today, pull back up, a modest one at this time, up away from the Fibonacci support and looking like a bullish harami right now. Thank you for listening. This short version broadcasts essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International. And here comes the final word.